Good morning and welcome to this weekly market update from AGM Markets. There's the 24th of February 2014. What we'll do today is go through some technical analysis on Euro dollar, cable, dollar Swiss, Aussie and gold. Just going to give a brief sort of review of what happened last week and give some sort of outlook for this week, mainly focusing on technical analysis. We'll have a little look at the Forex calendar, see what data is coming out this week. I will not make any trade calls recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website, which is www.agmmarkets.com. Okay, then let's have a look. Let's quickly, first of all, let's just look at the Forex calendar. This is I've just gone on Forex Factory. So in terms of today, fairly quiet. The main news is at 9 AM. When I post this video, the news will probably actually already been done. So this is the German IFO business climate, quite volatile. Does affect the euro dollar, and obviously the euro quite a lot. The forecast is 110.7, previous 110.6. So keep an eye on that. You also got Eurozone CPI, but that's sort of mid-tier data. That's why it's in orange. In terms of Tuesday, quite quiet. The only main headline data, the sort of high impact data, is the US consumer confidence at 3 PM GMT on Tuesday, and that is forecast at 80.2, previous is 80.7. Wednesday, in terms of high impact data at 9:30 GMT, you got the UK's second estimate GDP as forecast at 0.7%, previous was 0.7% as well. And then at 3 PM you got US new home sales forecast at 406,000, previous was 414,000. And then overnight, if you trade the New Zealand dollar, we got at 9:45 PM. You got the trade balance figures forecasted at 230 million, which at previous was 523 million. So that should be quite an interesting one. That forecast a big drop in the trade balance. And then Thursday overnight, you got if you trade the Aussie, we'll look at the Aussie chart in a minute. And you've got the private capital expenditure quarter-on-quarter numbers forecast is minus 1.0%, previous 3.6%, so expecting a drop there. Then you've got some mid-tier data out in the morning, but the high impact data for the day on Thursday is the US core durable goods orders numbers. Of course, you got the normal durable goods, but the core one is the more focused on number, and that's expected to be minus 0.1% from the previous minus 1.3%. So we're expecting a slightly better number there. And then at the same time, you've got the weekly jobless claims, the weekly unemployment claims out of the US forecast at 333,000 from the previous 336. And then on Friday, quite a bit of data out, a lot of sort of mid-tier and low impact data in terms of overnight. At midnight, you've got the New Zealand ANZ business confidence. There's no forecast number, it's just previous, which is 64.1. Then at 10 AM we got the Eurozone CPI flash estimate year-on-year number forecasted at 0.7%, and the previous was 0.7% as well. Then you got the unemployment rate coming out at the same time as well. I mean, it's mid-tier, but it is quite important. And sometimes these mid-tier data, if they're quite an extreme in terms of how they come out against the previous, they can move the markets quite a bit. In terms of the rest of the high impact data for the rest of the day, which is the end of the week, you've got Canadian GDP out at 1:30, forecasted at minus 0.2%. The previous was 0.2%, so we're expecting a drop in that. Then you've got the US preliminary GDP quarter-on-quarter numbers. We're expecting a drop from the previous 3.2% to the forecast is 2.6%. Then at 3 PM, we've got the US pending home sales month-on-month numbers. The previous was a massive drop, minus 8.7%. We're expecting a much better number here out of the US, and the forecast is 2.9% there. Then to sort of finish the week off, we have Bank of England Governor Mark Carney speaking at 3:30 PM. So keep an eye out what he says there. It could end the week quite volatile. Can produce some interesting volatility there. For the weekend, it's just interesting to keep out. You've got the Chinese manufacturing PMI, that does affect the US and the yen as well, and of course the Aussie in terms of a risk-weighted asset. The previous was 50.5. The forecast is 50.2. So that's the FX calendar done. Let's look at the charts now, and yeah, let's see what's going on. So in terms of the week, we'll just have a brief look on the week. I mean, you will know about this fib setup here in terms of sorry, excuse me a sec, just need to line this chart up. In terms of the weekends, the only setup I'm really interested in is this one here. This is the fib from the high of 2011 to the low of 2012. Sellers coming in at the 61.8% retracement here, trying to cap it, bring it back down, but of course we've had a slight bounce off of the 50% retracement here, and it's acting as key support, and it's just grinding higher towards this 61.8. We said that last week's video, expected some sort of grind higher, and last week's weekly candle was that. Not a huge amount of volume in the euro dollar, and in terms of like trading ranges, it's not a massive candle. That cable's much more interesting to trade. I mean, if you day trade, in my opinion, I think there's much more better opportunities. But in terms of this weekly chart, in terms of this week, I'd just expect another grind higher towards the 61.8. But of course, it's testing these spike highs to the left here, so don't be surprised to see it catch some resistance. We may get retracement down. It's a tricky one to call in terms of the weekly, in terms of this week's candle. Of course, we do these videos on a weekly basis, so in terms of the weekly chart, I'm only really interested in the sort of the previous week's candle, to be honest with you. But yeah, it should be an interesting one. In terms of the shorter term time frames on the euro dollar, well, in terms of what happened last week, we spoke about this fib here. We said it could act as some sort of interesting resistance, because we were hovering in between the sort of 50%, 61.8% range last week, but we got a daily candle close above, and it's just sort of been chopping around really. It came back down, tested this 50%, which was previous resistance, and it turned into new support, and we got a slight grind higher, and we're now above this 61.8% retracement here on the euro. If we do get some sort of healthy retracement, then this would be a fib that I'd personally be looking out for. This sort of small dip here, I thought a lot of people would be looking at this, because you've got some moving averages coinciding with this 50% and the 61.8% retracement. So that could get some interesting sort of confluence support there. And then the other sort of move really, well, I mean, you got this move, don't forget this move here, of course. It's still technically in play where the 50, well, this is the original move, the 50%. So we came up here, retraced down to 50%, we grinded higher, and these highs, we got spike above and close below. So this move is still technically in play, but you're also going to get a lot of people looking at this move here, which isn't that great, to be honest with you, because I think it came off the, it may have come off the 78.6 or the 76.4 fib. But in terms of a level, it's just 134.80s really is key support. But in terms of this week, in terms of setups, really the only one, if I mean, let's say if we do top out, which is looking sort of slightly unlikely, I mean, its current daily candle is nice and bullish, but this sort of setup here would be one to look out for. If let's say we do break these highs, then you can just extend the fib upwards. I mean, yeah, euro's popping high now, no surprise. I wouldn't be surprised that the data that was out at 9 AM would have been quite bullish. I'd have thought that's why we'd be popping high, to be honest. You can see that nice spike towards the upside there. But yeah, in terms of euro, that's the main setup. It's all about just looking at the levels really. So I mean, now that it's nice and bullish, I'll certainly have 138 up here at the minute, because that you can see we've got the key spike highs here. It's key resistance, so keep an eye on the price action there. It looks like it wants to come up and test that level, and that's one level that I'll definitely be keeping an eye out on this euro dollar. And then also the other level in terms of really short term stuff, so it's all about the fib that we just spoke about. So I'll definitely keep this on my chart, because that is a small resistance zone which we're very, very near, and that's at 1.3728. So in terms of my sort of chart at the minute, I'm just keeping those two levels up. So this fib here, let's say, because it could easily spike here and then retrace back down, and then you can see we've got a nice 200 SMA here on the 4-hour chart as well, but if we do break higher than the first resistance, I'll be looking out for is at 138. Okay, let's have a look at the cable. Cable, really interesting chart we spoke about last week. These sort of highs around here. So we're talking about sort of 168s. 168 is a key line in the sand in terms of this cable. And you can see last week where we spoke about these highs last week, we said I think we said 168 was key line in the sand, and surprise, surprise, we've had a nice sort of weekly sort of reversal candle off there. I mean, it's not an engulfing or anything, but it is an interesting reversal candle, quite a bit of red body and a nice bit of upper wick right off that 61.8s. So I would expect some sort of retracement this week. Of course, it doesn't have to. I mean, it can just it's currently catching bids off these spike highs here, and it could turn into new support and just easily break the 168s. But I wouldn't be surprised to see some sort of retracement. And then in terms of this weekly, really, it's all about this fib here. It's the only fib that I'm interested in on this weekly chart, because it's the low of 2013 to the high of this 2014. But of course, we're still a long way away from that. And then if you flip it to the daily, it is still the same fib there, but I think the really interesting move that I'm personally looking out for, if we flip it to this 4 hour, is this fib move here. So this is from the low of the 4 hour chart to the high of the 4 hour chart. This move here, it looks like it's forming some sort of bull flag. So if it keeps on flagging down towards this 50%, I personally think that would be a really nice support zone there. We could get some real sort of traction and momentum towards the upside. And in terms of sort of shorter term time frames, it's just I mean, the round numbers last week were really nice to play off of. So the sort of numbers that we're at now, you got 166.50s around there, and then 167s as well. I'd be keeping an eye out for if we do get some sort of pop up. Because I personally think it should come down towards this 50%. But of course, I mean, this current 4 hour candle is extremely bullish, and I think this is off 166s. So this is why I personally look at the round numbers. I think they just act as really good support and resistance. You can see this is also previous resistance around here as well, pretty much to the pip. So previous resistance now turning into new support, and cable is very strong this morning. So there's nothing stopping it breaking this bull flag here and just popping up and taking out these highs this week. But if you personally do think it's going to come down towards this 50%, then one fib I'd definitely be keeping an eye out for in terms of price action is this one here. So from the highs to the lows there of the bull flag, if we get some sort of retracement up towards the 50%, which was also previous resistance, you can see, and coincides with 167s as well, then we could get some sort of retracement towards the downside and continue that downtrend. But no, there's two key fibs there and some nice round numbers, and that's how I'll be keeping my chart for this week. In terms of dollar Swiss really hasn't been that interesting in terms of a weekly chart. We've been saying about a long time now, and it's just sort of grinding lower and lower. No massive candles, but we've spoken about the key line in the sand for this dollar Swiss was all about the 0.89s. You can see that's the key line in the sand and multiple spikes below, but we've been holding above, and we said if we close above, then the odds are for rotation towards that 50-week moving average. But if we get a close below, which we finally have had a close below here, close below this in the 89s, then we can get some serious movement towards the downside. And then if we do, this will be the fib I'll be looking at for. So this is the low of 2011 to the high move of 2012. And that 50% comes at 0.85. So of course we're still a long way away from that, but that's the only real interest I have, to be honest with you, in terms of this weekly chart. And then the other level actually that we should keep an eye out for, because of course we haven't broken these lows yet, and this low pretty much coincides with 0.88 level. So that's the key support in my opinion. I think keep an eye on the price action. If we do come down towards that, if we get some sort of reversal candles, and there's nothing stopping it rotating higher towards that 50-week moving average. But that's all I'm personally focused on the date on the weekly chart. And yeah, in terms of the daily chart, well, we've got that 0.88s, and then in terms of weekly support, 0.8846s. I mean, let's just be simple and just call it the 88.50s here. Key support, we haven't had a daily candle close below that in a while. Yeah, we haven't had a daily candlestick close below that in a while, and you can see we're currently we're hovering just around it at the minute. But yeah, that's all I'm massively focused on. I mean, if you're looking for selling opportunities, then this fib here, let's say if we bottomed out here, keep an eye on this fib towards the 50%, or you can use that high there. I personally prefer to use the more obvious swing high here, but yeah, keep an eye out on that. And yeah, if you flip it to the 4 hour, nothing major's really sort of popping out at me. Basically all that fib really. I mean, just to keep it, all I'll really be keeping an eye out for really, to be honest, is these 88.50s and the 8800 levels, some sort of key support zone, sort of support range. Okay, let's have a look at the Aussie. The Aussie is really interesting, I think, on this weekly. Spoken about it numerous times now. This fib here played out pretty much I mean, that's the most textbook fib move you're ever likely to see, to be honest with you. A clear downtrend, clear retracement off the 50%, nice reversal candle, and you come down towards the 0%. So now the next move that we're looking at, well, definitely I'm looking at, I spoke about it in last week's video as well, is this move here. So we've moved the high down to where we came off the 50%. We've just extended the low towards the recent swing low, and the 50% comes in at 0.9208, so a nice round number there as well. And if we flip it towards the daily chart, it's the same move, and it's the same thing that I'm keeping an eye out to. And we see we're currently struggling at the 100-day moving average. I spoke about that last week as well. So in order to get to this 50%, we need to get some clear daily close above that. But I do think it will come towards there. And if we flip it to the 4 hour, let's say if we want, in terms of buying opportunities, I'm personally be looking at this fib here on the 4 hour. So this is from the low on the 4 hour chart to the high of the 4 hour chart. Nice uptrend. I mean, it is chopping around at the minute, and it's getting supported at 0.8940s. That's the key sort of line in the sand in terms of this 4 hour chart. It's propping it up at the minute, and it's acting very nicely. Sort of pretty much a triple bottom it's forming here. So it looks like it will hold, and it will keep on grinding higher. But if it does come back down, then keep an eye out. I'll personally look at this 50%, which comes in at 0.8870s, and it also coincides with previous resistance around here, which I'm hovering my cursor over. So previous resistance could act as new support there. But yeah, that's the main focus on Aussie for me personally. Gold, we've been speaking about for the last sort of few weeks now, how it's been, we've formed a nice double bottom here at 1200s pretty much, and we've been saying it's just been due a sort of nice grind high towards this 50-week moving average, and that's what it's currently doing. Last week's weekly candle, a nice sort of bullish continuation pattern, a nice bit of green, but a longer lower wick than upper wick, so it indicates that the buyers are in there more than the bears, in my opinion. So keep an eye on that. We haven't quite tested the 50-week moving average yet, but we could get a nice test of it this week, and keep an eye on the price action, because if it reverses, then there's nothing stopping it coming back down and testing these 1200s. But I personally think that we're due a more healthy retracement, and one fib I'll personally be keeping an eye out for is this one here. So in terms of this weekly, this fib here, the 50%, you see it coincides with this 200-week moving average here, so it's flattening out. And when the moving averages flatten out, they tend to act as better resistance, in my opinion, so keep an eye on that. But of course, we're still a long way away from that. And yeah, in terms of the daily, I mean, as I personally think it's just going to keep on grinding higher. In terms of if we do get some sort of retracement, I mean, I'm not going to personally be buying at these highs, but if we do get some sort of retracement, then I'll just be looking at this fib here. So from the low of the chart to where the current high is. I mean, let's say if it grinds high and breaks, I'll just move the fib up and wait for the retracement. But yeah, that's the current one, and you can see it does coincide nicely with these moving averages as well. And funny enough, actually, got the 50-day moving average crossing up above the 100 moving average. So it's a nice crossover there. A lot of people see that as a strong buying signal and a confirmation that we're now in an uptrend. And in terms of the shorter term charts, the 4 hour, nothing major of interest really. We haven't had any sort of healthy retracement. I mean, if you're just buying the dips, then it's, I mean, there's a nice sort of support there at the 1310s. You got a few 4 hour pierces below that, formed a nice support, nice reversal candle there, and it's grinded higher. So in terms of if you're an aggressive dip buyer, then keep an eye on those sort of moves there. But no, that's nothing majorly of interest in terms of that gold, unless we get some sort of healthier retracement. Okay, then that's all for today. Hope you found that video useful. Should be an interesting week in terms of markets. Lots of data coming out this week, as we spoke about on the Forex calendar at the start of the video. Yeah, hope you have a great rest of the week trading, and I'll catch you next Monday. Thanks for watching.